What is going on, investors? It is Bank Earnings Friday, and we're going to keep that rolling right along here as we take a look at Bank of America Corporation, ticker symbol BAC. Over the last year, what stock isn't down? This one's down 29%, but over the last 6 months, this stock has been rallying up over 12% over the last 6 months. We'll get into some of the reasons why. We'll also take a look at the Q4 earnings, which came out before the bell. We had revenue coming in about $24.53 billion. That was 11.2% growth year over year. It beat expectations by about $360 million, as expectations were closer to about $24.2 billion. Now, for the upcoming quarters, we're expecting 25.7 for the next 2 quarters. And that'll get you kind of to a low double-digit growth rate. Then things get a little bit interesting. That is when people think maybe the bank earnings will start to flatten out from a revenue perspective. From the earnings side, though, you're actually exceeding them, actually start to accelerate towards that time, and then sometime maybe into 2024, though you don't have a lot of predictions for that time frame. And obviously, it's a little bit difficult to look that far out into the future. But all things being considered, things look actually pretty good for the bank stocks over the next couple of quarters. Now, some of the reasons why is you obviously have that net interest yield. So if you have that yield kind of ticking up on those credit cards, on those auto loans, even the home loans, people are taking those out. Well, you're able to charge a little bit more. Look at this skyrocketing net interest yield over the last several quarters. But we are seeing that it is impacting demand for those average loans and leases. I'm seeing this is really starting to look like it's going to flatten out. Now, obviously, somewhat negative for a company like Bank of America, JP Morgan, any of the banks out there that make money loaning money out, somewhat negative for them. But when we take a step back and look at this from the broader economy, what is the Federal Reserve trying to do? They're trying to slow down the economy, and this is what it is actually doing. It is slowing things down. Now, at the same time, a bank like Bank of America can continue to make pretty decent money because those interest rates continue to tick up. Now, let's take a look at the consumer banking. We won't go through all the segments over at Bank of America, not that they're not important, but we'll focus primarily on consumer banking because it's about half the business. You had total revenues coming in about $10.8 billion in the unit. Last year, you're sitting right about 9. So solid growth year over year. Last quarter, you're sitting very close to 10. So solid growth on that revenue side. But what they decided to do in the most recent quarter was really set aside a large amount of money for those provisions for credit losses. So the company, what they decided to do is they've got computer algorithms, they've got experts and bankers in the back. They're saying, well, I think people are going to stop paying their credit cards. I think people are stop paying their car and home loans to the tune of about $944 million in the most recent quarter. Last quarter, it was 738. That was quite an acceleration. And you see last year, they weren't really worried about it at all, setting aside just $32 million, which is basically nothing. So this provision for credit losses actually just kind of pulls off almost like an expense side. Now, the money doesn't go away unless those people actually don't pay their bills and pay their loans back. But for the time being, from an accounting perspective, this is actually pulled off like an expense. Now, we have non-interest expenses here. These are your salaries and those types of things. Flat quarter over quarter, year over year, just marginally. When we get over here to a broader view, you'll see how well run this company is and how wildly profitable it is. Now, off of this $10.8 billion, after all of these things are considered, you printed about $3.6 billion worth of net income. Last quarter, it was 3. Last year, it was closer to 3.1. Now, some other things that we are seeing in terms of the trend, the deposits are still going up. People still have money, believe it or not. There still is a strong labor market, so people are still getting paid, and you see year over year, your average deposits are up just fractionally. Quarter over quarter, they are fractionally down, though. Your average loans and leases, surprisingly enough, those are still ticking up. Probably on, I would assume, on the credit card side, people are maybe charging a little bit more, and you see evidence of it when you come down here to average credit card outstanding balances. You see that we have about $89 billion. Last year, it was 78, and last quarter, it was 85. So people are just piling more and more onto that credit card. And I tell you what, if they are able to pay them and pay them with some consistency, well, that's a huge business for Bank of America. But obviously, that exposes us to charge-offs and people maybe just walking away from those credit cards. Again, your provisions for credit losses, about $1 billion over the last 3-month period. This is a company-wide wide view now. So when I showed you that the consumer banking, they set aside about $944. They've got other business units from a business perspective as well over at Bank of America. So company-wide, they added about $1.1 billion. Again, it was about $900 million last quarter, and last year they actually took about $500 million from those provisions. So a dramatic acceleration. So your net charge-offs, those are ticking up. I mean, they basically doubled over the last year, and they're up rather significantly quarter over quarter. Your charge-off ratio, again, just showing you rapid increase here. But when you look historically, you start looking back to 2019, 2018, 2020, early 2020, these charge-offs are still just really getting back to normal. And that's exactly what we want from a financial perspective. These large asset bubbles, these large fiscal stimulus, they create these kind of unnormal situations. And yeah, it's great. Sometimes your stock, sometimes your home, sometimes even the value of your used car skyrockets. But these types of things don't create a very normalized and a very consistent economy. So as these things actually start to normalize, while in some cases for Bank of America specifically, maybe not the best for their business, overall, this is actually exactly what you want from the economy. Things getting back to a little bit more normalized level. It'll allow the economy to grow maybe at a more healthy rate instead of kind of these boom and bust cycle that we've seen. Not saying that the boom and bust cycles are leaving us forever, but for the time being, we're getting back to a little bit sense of normalcy. Now, come over here to the company-wide statistics. You had that $25.5 billion worth of revenue. Again, that was about 11% growth year over year, even quarter over quarter, just fractionally higher. Now, your non-interest expense coming in at 15.5, up a little bit quarter over quarter, and up again year over year. You expect some increases when you increase your revenues like this. Pull all the way down to your net income number over at Bank of America, about $7.1 billion. It was right there in the third quarter, and it was basically right there in the fourth quarter. So just very, very steady business. So despite some turmoil when it comes to loans and lease demand, when it comes to setting aside money for provisions for credit losses, you are just seeing this company just steadily spit out $7.2 billion worth of net income every single quarter. This is exactly what you want to see when you invest in a bank stock. Now, you come on down here to book value and tangible book value. This gives you an idea of kind of the total book of business that Bank of America operates. I tend to focus on tangible book value. You could focus on book. It doesn't really matter. Tangible book value is if we were to liquidate everything over at Bank of America, not give any value or any intrinsic value to other parts of the business. Just a straight book of business is worth $21.83 per share. Currently, the company is sitting at about $34. I don't want to say always, but you typically pay a premium over book value, especially businesses that are run this efficiently and have these amount of profits. And then we're seeing a buyback quarter over quarter, year over year as well. You've got an increasing dividend. So there's a lot to invest in here other than the book of business. What some investors do though, and they make a pretty big mistake, is they'll look at like a Citigroup, or they'll look at Wells Fargo, or they'll look at some other bank, and they'll say, well, that bank's tangible book value is this, and Bank of America is this. I would not compare bank to bank. I would only compare a bank to itself. So in this case, we can come over here. This is basically a graphical or a charting way of looking at price to tangible book at Bank of America. Currently, we're sitting at about 1.6 times tangible book. And from a perspective of this company, it's not wildly undervalued. When you get under 1.5 times tangible book ever at this company, it does signal maybe a buying opportunity. When you're over kind of 1.6, you're not getting a screaming hot value, but it's not the worst. When you get over 2 times tangible book over at Bank of America, it could be a time, if you want to potentially take profits. Now, when you come over here and look at it from a technical perspective, it is about as beautiful as it gets. You are in a decade-long uptrend. I'm on a weekly chart here. I've drawn in these red lines. It doesn't really matter how accurate these red lines are drawn in. What you want to do, though, is give yourself a sense here, just a broad sense on a weekly view. Here's a 10-year view of Bank of America, really going back to 2011. The stock is spent just a couple of weeks below this red line, and it's spent a couple of weeks, maybe more than a couple, but a handful of weeks above the red line. And this is about as simple as it got. I know people are like, oh, technical analysis, not this, it's not that. No, what it does is gives you a sense of where people are buying this stock. And we've got so much data here. I mean, we've got thousands and thousands of data points here. This is telling you that when the stock is close to this bottom red line, in fact, maybe we should change this bottom red line to like a purple line, so we can distinguish them. When you're close to this purple line, it actually has been historically a great time to buy the stock. And here we are, just maybe a couple of percentage points above this purple line. Believe it or not, despite the more rally and the momentum that the stock has, it's still actually close to what I would consider a decent buying opportunity. We should have some overhead resistance up here at about $37 per share. And, you know, you're looking at a couple of dollar increments over that. You should have some overhead resistance. But I tell you what, you've got some distance until you get to the top of this range. I tell you what, if you kind of slow walk up to the top of the range, this is still like a 60% increase that if you just really just follow this technical pattern, which has really been in place for the last decade or so, if you follow that technical pattern with Bank of America, you still have potential like 50-60% upside getting back to really what you want to do is see this stock get above 48, 49.50. That would basically confirm that this technical pattern continues to be in place. And I know I'll have people in my comments saying, well, it's too early to buy. Jerome Powell hasn't told me to buy stocks yet. Well, I tell you what, this 10-year technical pattern on a single stock, and we're seeing this in a lot of different stocks that we're looking at, this is actually telling you that it actually is okay to buy these types of stocks. You can compound that dividend. You get the benefit of that buyback. Yes, there are some headwinds over at this company, but boy, things are looking pretty good. Things look good for this company in a low interest rate environment, and even in a higher interest rate environment, things still look pretty darn good with Bank of America. And we saw a complete reversal with the stock. Earlier in the day, it was down at about $33 per share. It's reversed a little bit, up nearly 1% to about $34.80. And again, over the last 6 months, you're about up 12.75%. That was Bank of America Q4 earnings. We'll be back later today with the FANG stock recap show. Hopefully enjoy your weekend. Good luck with your investments.